Michael Burry has kept awfully quiet these past few years, but recently we got some news.
Michael Burry just bought huge into 5 new stocks. Essentially, he's put his whole portfolio into these 5 investments.
This comes as a big change from what he said in the recent past. I remember his prior tweets being extremely bearish. The question is, why has he changed his tune, and what are these 5 stocks that the man who made billions from shorting housing 17 years ago has put his money in today? We're gonna start with his smallest buy and then work our way up to the biggest investment that he's made. The smallest was the exact same stock that Warren Buffett plowed the most money he has into any stock for a long time, and that is UnitedHealth. Michael Burry bought 20,000 shares of the stock at a price of $311, worth $6.2 million. UnitedHealth, does this company ring a bell? Unless you've been living under a rock, you will know that this has been a company ridden with controversies. Over the past 2 years, it has faced a fraud investigation from the DOJ, a tragic killing of their CEO Brian Thompson, who was shot outside a Manhattan hotel, widespread accusations of prioritizing profits over patient care, and their stock fell 60% in price. You would think that nobody would want to own this stock. Just like you would think that nobody should have been shorting houses when it was booming in 2007. But of course, Burry is a contrarian investor and does not mind at all going against the crowd, just as long as he has done his own analysis.
As such, I recommend sober analysis on the part of the individual. This is paramount. We must remember that entire societies can and do follow the wrong path for a very long time. They do run aground. And there's nothing wrong with breaking from the social norm to ensure good outcomes.
Using Forecaster, we will show you why investors like Michael Burry, Warren Buffett, and David Tepper have all decided to go against the crowd and buy this stock. But first, let me show you stock 2 that Burry has bought. MercadoLibre. Michael Burry bought 3,000 shares of the stock at a reported price of $2,600, which gives it a total value of $7.8 million that he bought. MercadoLibre, people often call it the Amazon of Latin America, but it's actually more than that. It's like a mix of Amazon, eBay, and PayPal all in one. And this company, unlike UnitedHealth, has been on fire these past 5 years. Forecaster shows us that it is up 100% in price, recovering from its dramatic dip that it had following the pandemic in 2021. It's currently selling for a price of $2,400 per share. If we look at the fundamentals, it tells you a story of a high growth company. Actually kind of reminds me of a young Amazon. You know, in 2020 and the years prior, they were losing money, but they were investing heavily. And then they managed to turn a profit, and now they are getting decent margins on their revenue. $1.9 billion in profit is a really good year. And the revenue picture shows just consistent growth. 2019, $2 billion in revenue. 2022, $10 billion, and now $20 billion in revenue. So basically they 10x their revenue in 5 years' time. Despite 10xing in revenue, the stock is only up 2x in price. So it's perhaps for this reason why Burry has bought. In a way, he's still sticking to Burry's style of being a contrarian. You know, not too many US investors are buying South American companies. The big money is certainly not going there. And stick to the end, because a bit later in the video, I will show you exactly what Burry looks for in a stock, the ratios that he seeks, and the strategy that he uses when buying stocks. Regeneron Pharmaceuticals. This is another company just like UnitedHealth that has absolutely crashed in price this past year. It's down over 50% from $1,200 late last year to $590 today. Michael Burry picked up 15,000 shares of this stock at a price of $525, worth $7.8 million in total, and this makes up about 14% of his portfolio right now. So Regeneron Pharmaceuticals, they discover, develop, and sell medicines for serious diseases. This includes medicines for eye diseases, allergies, asthma, cholesterol, and some certain cancers. But they've been struggling recently. Their top selling drug, Ilia, isn't selling as much these days. Some of their new drugs were not approved by the FDA. They've had failed experiments, including a drug for lung disease, COPD, which didn't work well in tests. And these are some of the reasons why the stock is down by a lot. But this is the type of stock that Burry loves. Misunderstood, panic panic in the air, fear is high, and importantly, prices are low. He said, and I quote, "I try to buy shares of unpopular companies when they look like roadkill and sell them when they've been polished up a bit. Ick investing means taking a special analytical interest in stocks that inspire a first reaction of ick. I tend to become interested in stocks that by their very names or circumstances inspire unwillingness and an ick accompanied by a wrinkle of the nose on the part of most investors to delve any further. This stock, Regeneron, definitely gives what Burry calls the ick. You look at it and you just don't want to buy it. Their top selling drug is down in sales. They've been struggling to bring new products to market. The price is down over 50%. But this is all part of Burry's contrarian style. If he believes in it, even if the whole world thinks the other way, he will make a move. Often, biotech stocks like this are punished for short-term issues like trial delays or patent concerns, but the stock still has strong cash flows and a manageable debt. It has a decent moat with its core drugs too, and the PE ratio is relatively low compared to the market. And I think that Burry has taken a similar stance with UnitedHealth stock too. Everyone is panicking with UnitedHealth stock because all of the issues that surround it. But despite short-term headwinds, UnitedHealth remains the largest US private health insurer. At the end of the day, people will always need health insurance. Buffett knows this, Burry knows this. Also, UnitedHealth has a big tailwind in that the US population is aging and Medicare Advantage has been expanding. So more and more people require UnitedHealth services. Yes, if we look at Forecaster, we can see that they had a dip in their profit in 2024 from 22 billion to 14 billion. But in 2025, they've basically recovered. Those 2 quarters in 25 are right in line with high yearly profits. And if you look back at the past 4 quarters, add them all together, they've still made $21 billion. And then look at their sales, it has been consistently going up year in and year out, which any investor likes that. So despite what the news is telling us, the fundamentals are saying a different story, and Burry and Buffett both focus on fundamentals, not the news. We have one more stock to go, and then we will see the largest stock that Burry has been buying into. With stock 5, he bought double the amount that he bought into UnitedHealth stock. So he is very bullish on stock 5. But stock 4 is Bruker. Again, you could have guessed it, but Bruker is a stock that has fell off a cliff this past year. Since March 2024, it is down 60% from a price of $90 to $35. As what Burry would say, it looks like roadkill. It's estimated that Burry got in at a price of around $41 a share. He bought 250,000 shares, so that gives it a total value of $10.3 million, or worth 18% of his portfolio right now. The first thing that we need to do is understand the stock a bit better, and then understand why it's down so much. So if we go to Forecaster, who are sponsoring this video, and then we click Forecaster AI Agent, and click Business Explained Simple, you can see that Bruker is a company that creates and sells very special tools and devices used in science. Imagine being a detective, but instead of solving crimes, Bruker helps scientists explore tiny bits of life and materials, almost like looking at things under a super strong magnifying glass. Summed up simply, they make scientific instruments, they have tools for analytical solutions, and they produce medical devices. So basically, Bruker is a picks and shovels type company for science. They don't usually make the drugs or materials themselves, but they make the machines that help others do so. But what's happened? Why is the stock down so much? Well, they are navigating a complex landscape characterized by declining profitability, compounded by external pressures such as NIH funding cuts. By the way, if you want to use this tool yourself, just click the link in the description to get 10% off Forecaster, and then you'll get full access to all of their website and their features. They've just released a brand new feature, which is like ChatGPT, but for trading and investing. You get access to this feature too, just by joining. But if you look at their fundamentals, it will show you exactly what Forecaster's AI agent said. You can see that declining profitability is almost an understatement. So 2023, they had 400 million in profit. In 2024, they made 100 million. And then you click on quarterly just to see 2025, has things gotten better? No, they are not getting better. Just look at how slim those margins are. There's only one reason why Burry would be buying a stock like this, and that is because he thinks that everyone is wrong. He thinks that this 60% downturn is over overkill. And per what he said, he likes to buy stocks that look like roadkill and then wait for it to be polished up a bit before selling. And there's nothing different to what he's doing with Bruker. He is sticking to his strategy. And some of you might be interested in what exact ratios Burry looks for in the stocks he buys. I did some deeper research into this and I found some absolute gold. He said, "My weapon of choice as a stock picker is research. It's critical for me to understand a company's value before laying down a dime. I have found, however, that in general, the market delights in throwing babies out with the bathwater. So I find out of favor industries a particularly fertile ground for best of breed shares at steep discounts. MSN's Money Central Stock Screener is a great tool for uncovering such bargains. How do I determine the discount? I usually focus on free cash flow and enterprise value. I will screen through large numbers of companies by looking at the enterprise value to EBITDA ratio." Important, enterprise value to EBITDA ratio. I had a look through all of these 5 stocks that he bought, and yes, all of them apart from MercadoLibre had a low enterprise value to EBITDA ratio. The second lowest was UnitedHealth at 9.3, and the lowest, aka the cheapest, is the last stock that we'll show you soon, which had an EV to EBITDA ratio of 8.5, very low. So this is a key metric that he looks at, and the other one that he mentioned was free cash flow and enterprise value. Because I literally have no life, I found each one of these stocks enterprise value to free cash flow ratio. Bit of a mixed bag. UnitedHealth was very low at 11.39. MercadoLibre was a negative ratio because it generates negative unlevered free cash flow. Obviously, Burry thinks that this will change. Regeneron Pharmaceuticals was lowish at 16.1. Bruker was 32.5, and the last stock was 21.3. So some of these ratios are lower than others. Burry said, "If a stock passes this loose screen, I'll then look harder to determine a more specific price and value for the company. I prefer minimal debt and am careful to adjust book value to a realistic number. In the end, investing is neither science nor art. It's a scientific art. Over time, the road of empiric discovery towards interesting stock ideas will lead to rewards and profits that go beyond mere money. I hope some of you will find resonance with my work and maybe make a few bucks from it." Well said, Michael. Now, before we look at the stock that he has been buying the most of, there is one stock and only one stock that he has been selling. That stock is Estee Lauder, in which he sold 50,000 shares. He's now left holding 150,000 shares still, so he reduced his original position by 25%. Not too much I can say on the stock. He still has kept 75% of his position, and I think that he's waiting for it to be polished up a bit, as he would say, before he sells it. Okay, this is the largest stock buy that Michael Burry made. In total, he bought 50,000 shares at a price of $237, which makes it worth $11.8 million. And right now, it makes up 21% of his overall portfolio. There's an interesting story behind the stock because, what do you know, it has been crashing. It was $500 a share last year, and now it's $200. But we take a look at sales, and that has just been increasing. 8 billion, 9.6 billion, and today, 10.7 billion. And look at net income, yeah, that has been increasing too. So why on earth is the stock down? Well, one reason is tariffs. Lululemon sources a significant portion of production from Asia. US tariffs are very high on countries like China, of course, as we all know, and are now high on other Asian countries too. So this eats into the company's margins. You also have other analysts saying that Lululemon has shifted away from its core brand and is becoming too generic, including offering clothes that are of a sesame street palette, bright purple, pink, yellow, and blue clothing items on store shelves. I really don't think Burry is too concerned about all of this, and he obviously sees the 60% decrease in price as a big sale on the stock. A typical contrarian Burry type bet. Now, just a reminder that there is a lot of nuance with these stocks, and this is all what Michael Burry has done, and don't just go out and copy him without doing your own due diligence. Thank you, Forecaster, for sponsoring the video. If you want to get 10% off Forecaster and get access to features like their AI agent, which can make your investing life a lot easier, click the link in the description or the pinned comment. You'll also get exposure to their brand new projections tool, which is a game changer for many stock traders.